Good afternoon. Today is February 28th, Friday. This is Justin Soucy, and I'm here with Lou Harris.
Hello.
We just wanted to provide a GNS Perspective audio update on the markets, the coronavirus, kind of what's happened this week, and the GNS Capital response. The markets are officially in correction zone, which is defined as a 10% drop from their peak. So that happened yesterday, a little bit more follow through today with the markets. Certainly we were anticipating a pullback. The markets were overbought heading into February and kind of through the end of the year. We just didn't expect it to be this quick or this volatile over the last 6 or 7 trading days.
Yeah, and in the past, Justin, a drop like this often corrects itself, so kind of a correction to the correction. And generally speaking, the prices return to their long-term trend, typically not turning into bear markets. If you look back to 1974 to today, there's been about 22 corrections, and only 4 of those turned into bear markets. Now, regarding the coronavirus and this epidemic, we have a couple charts that we've looked at as far as from the 1930s till today, all of the epidemics and what they've done to the market. None of them have actually had catastrophic market impacts if you zoom out a little bit, but we can expect some short-term volatility over the next few months, just given that the coronavirus is still so new, and there's really not a lot of experts out there on it right now, so we're still kind of turbulent as far as figuring out how we're going to solve this issue. And if we look at the most recent major epidemics, that's the swine flu in 2009 and Ebola in 2013. If you look at the following 12 months from those outbreaks, you'll see that the S&P actually returned to positive territory, 10% for Ebola and then about 36% for the swine flu. So overall, the S&P was positive the following 12 months for 9 out of the 11 epidemic cases in history. So that's pretty impressive. I mean, we can't predict what's going to happen with the coronavirus here and the long-term impact, but typically the market is able to correct from these type of situations.
Yeah, and let's hope that's the case this time. I mean, we have been responding within some of the strategies. Took a little bit of profit a few weeks ago, generated a little bit of cash and a little bit of dry powder in some of the stock portfolios at the beginning part of this week as well. So, we are responding. We are trying to lessen some of this downward move, but it's a delicate balance, right, Lou? We don't want to go
absolutely
too quickly to where there's not enough exposure if this thing rallies hard, but we also don't want to assume that this time isn't going to be maybe somewhat different when it comes to the length of time for recovery or the severity of the decline. So want to make sure we're being appropriate, being prudent with your portfolios. And we also want to make sure people are keeping in mind that, how does their financial plan look? How's the long-term picture look? Is this really derailing retirement plans or goals that clients have had? So if you want to talk about those or if you want to talk about the markets, give us a call. Myself, Lou, Tara, we're all happy to chat about how your portfolio is positioned and keep you in the loop of what's going on.
Thanks for listening.
Thank you.